Friends, thank you for watching my video this morning. In my career, I've touched the American community banking market in numerous ways. I've worked as a retail employee benefit consultant. I've been a broker placing bank-owned life insurance transactions. I've worked as a general agency for dozens of credit unions and served as a strategic partner to other large bank-owned insurance agencies for their employee benefits business. Now, over the last year, I've spent some time looking at various historical transactions in the M&A space for bank-owned insurance agencies. You can see some examples of these publicly available details here. And in sum, there's a huge variation in valuation across these agencies when you look at multiples against earnings. So it made me wonder, is there an opportunity to add value to many stakeholders um, by acquiring one of these bank-owned insurance agencies with the leadership team at the insurance subsidiary of the bank? And I coordinated some conversations with investors, advisors, and operating partners to discuss the possibilities of acquiring a bank-owned insurance agency. Some of my work has involved researching the FDIC records, which demonstrate that for the calendar year 2021, there were 86 insurance agencies owned by banks with an excess of $5 million of trailing insurance revenue. So, um, as we pursued that conversation, about a month ago, I was talking with a classmate from business school who shared with me that maybe I was thinking about this totally wrong, and that as a commercial lender, maybe the bigger opportunity for me as an insurance professional would be not helping banks get out of the insurance business, but rather helping them get into it. Um, I took a look at the FDIC data again, and out of the 4,800 or so community banks in the United States, 4,625 of them during 2021 had less than $100,000 of insurance revenue, equating to approximately 0.00% of net interest income, um, and a median return on equity of 9.98%. Wow. Okay. So I thought that that was a really compelling idea. And in discussion with some additional folks, wonder now if the bigger opportunity is to help develop a digital engine for banks to help them identify business issues and quantify financial impact for clients, implement training for commercial lenders to enable them to identify and manage conversations about these business issues, and then network resources of expert regional insurance brokers, wholesalers, and insurance companies to bring together solutions by way of community banks to benefit ultimately their customers and therefore their own producing commercial lenders. So, I had a conversation with a number of bankers who have supported that this idea seems plausible and have advanced the conversation. I'd love some feedback from those of you in my network directly about this idea. Yesterday, in an interesting twist of fate, at a barbecue, I was talking with the father of a friend who chairs in the Midwest about a 100 employee, $500 million asset regional community bank. He told me in so many words he thought that this was a bad idea because, in his view and in his market, while they have deep long-term relationships with clients, there are also insurance agents who have deep long-term relationships with clients. And by implementing this kind of solution, it might actually alienate and introduce to the market an idea of the additional competition, which might jeopardize core lending, core banking relationships because of steerage by the other insurance agencies who feel threatened. So, what do you think? If you have experience as a leader in community banking or in insurance, and you've experienced some of these issues in the past and you think that there's particular opportunities to add value or risk an existing business by making a bad decision, please reach out to me and let me know. I'd appreciate any feedback that you have. I hope that you're having a wonderful Monday and look forward to talking to you all soon. Thank you for taking the time.